Hello, hello, hello. What's going on? How's everyone doing today? Welcome to Our Stock Trades. Hope all is well. This is going to be one of these videos right now, very quick, just to synthesize a couple of things that we got going on. So, in this video, we're going to go ahead and comment on an article I recently published, a comparison side by side by Alignment Healthcare and CLOV. We're going to go ahead and look at this competitor from the chief medical officer from Blue Cross Blue Shield for Medicare Advantage, and him deleting the post. And we're going to go ahead and compare this alignment and look at the technical analysis on the Russell. So lots to do in some short amount of time. So let's open up the intrinsics here, and then we'll go ahead and do this. So first things first, let's go ahead and just kind of get the elephant out of the room. Guys, what the freaking frick, right? What's going on with this guy, right? He goes ahead and makes a comment. This guy from the CFO of Blue Cross Blue Shield saying, oh, the only way you're doing this is you just getting a bunch of sick people and you're getting a bunch of money from, it's almost like he's basically, it's like you're guilty before proven innocent. I think it's the opposite, right? I don't even think Clover is breaking any rules, right? So ultimately, this thing backfired on the guy, and let me see what's going on here. Then someone commented, again, I took this screenshot because of, wait, no, not this one. Hold on. I took the screenshot, and no one, because the guy deleted it, so you won't see this. So Mr. Wise here said to the CFO guy, he said, CMO that can't keep any job for more than 1.5 years has no business acting as an expert on how MCR works. Very unprofessional to accuse someone without any shred of proof. I agree. Yeah, we'll just leave it there. I agree. Okay, so there's that. So we got that done. So that's kind of news for you guys. And then now let's go ahead and great moves on the fundamentals. How you doing? Hello. And then maybe he got fired from BCBS by not having a high job position and posting without permission. And the HR, yeah, I mean, who knows, honestly. No kidding. Like, what the frick, right? It's really weird, really weird. Obviously, you don't talk to your losers, right? If you're in competition, you're not going to spend time out of your day to go talk to anybody Clover Health, right? Obviously, Clover Health is doing something, okay? Yes, and it shows you how corrupt and dirty the healthcare business is. Okay, so now let's go ahead and talk about this. Now, this was published on Bar Charts. Clover Health's remarkable turnaround, a deep dive. Whoa, who posted this article? Oh, would you look at that? It's Al Stock Trades, right? Exactly, it's Al Stock Trades. Mother effers. Yeah. So we're, what's that meme again? It's like, I'm captain now, right? We're the media now. Let me see here. Meme, I am captain now. Yeah. Here, this is me to all those, Hedgies and Bloomberg. I'm captain now, guys. Okay. We're the media. Okay. So enough jokes. Let's move on to something serious. Okay. So let's go ahead and talk about Alignment Healthcare, Clover Health, and let's see what's going on here. So overall, you guys can read this, pause the video and read it. I'm not going to go ahead and read it for you. But what differentiates Alignment Health from Clover is the fact that they've been able to double down on their Medicare Advantage growth rate and have 4 stars. Okay. That's pretty much what differentiates them, I guess, from Clover. Now, if you were to go ahead and take a look at, and by the way, I posted this on the Reddit page here just to kind of share the love here. And this, this is me synthesizing this right now. So overall, year 1 to year 5 plus, you can see their goal is to go from 89% MCR. Again, MBR is like just the same thing as MCR. So medical cost. It goes all the way from 89 to 81. So it's going to take them 5 years to pretty much basically decrease 9 basis points, or 900 basis points. When in Clover, they're able to do it in 2 years, right? So obviously, what differentiates Clover, if you kind of want to have like a little Venn diagram, or not Venn diagram, but like the pros and cons, okay, 1 point for Clover for that, right? And interestingly, given they have, I don't know if I have, let me because I gave Yeah, I put this on the on our stock terminal here. Let me just open this up. So this is the presentation from JP Morgan Chase to Alignment Healthcare. So what they're going to be doing is they're going to be targeting 2024 adjusted EBITDA just like Clover, but what sets them apart is honestly the 44% growth in memberships for MA. Guys, that's really good, and that's something that I want to say, Clover, what's going on? Why aren't you growing? What's going on, right? So that's something that, you got to, if you want to be unbiased, you got to hold against Clover. Now, ideally, the reason why they are not growing is they're trying to control their SG&A, given that ACO burned the crap out of them. So I'm hoping that they'll be able to return to the growth phase, which they said they will, especially on their Medicare Advantage, because that's what's working. Okay, so we talked about that. That's what differentiates them. So that's the big deal right there. And ultimately, you can see within 5 years, you can see the MCRs within 5 years, 95 to like, and this is just by the way, these are just projections. I think they haven't even gotten to year 5, I think, right? Maybe some of them, they're showing you all of them right now and from 2027. So you can see how it takes 5 years for what Clover can do in 2 years. And then ultimately, because they're growing MA members, you can see the overall price targets for for Alignment Healthcare. It has a 986% upside at $9, I think, which is I don't know. Let me see. What's the market cap of that? LAH? Market cap of $925 million. So double it. So about $2 billion market cap. So, $2 billion market cap for Clover would be like $4, right? So, which is like more than 400% increase from the price right now. So that's kind of the idea, guys, right? So that's, I think, what Clover needs to get to. And if you can see that they kind of lay out, Clover's kind of laying out, their goals just like them. So they're trying to disrupt the MA. They have their own little AI type model that helps with their MCR. Obviously, it's not superior than Clover. Clover is really well. Remember, when Clover came on the market, they were the fastest growing MA plan. So I hope that they can get back to that, man. Okay, so durable growth. They're going to be doing the adjusted EBITDA. They're going to widen their competitive advantage. Their stars are way better than Clover. And again, guys, if Clover can get to that 4 stars, which they said they're going to do, especially that their growth rates are going to be more predictable, guys, that changes the game. The game has changed, okay? And the favorable 2025 outlook. So now let's go ahead and talk about the fundamentals. So on this side, we have Alignment Healthcare. And on this side, we have Clover Health. So you might have to look at a computer screen, but overall, the gross margins for Alignment Healthcare is 11% versus Clover is 13, okay? So already based off of just the gross margins, Clover is outperforming. Okay. Now operating margins, they're at -7. Operating margins for Clover -10. So that goes to Alignment Health. In terms of earnings per share, Alignment Health is losing 79 cents. Clover is losing 44 cents. So Clover is losing less money. But in terms of net income, Alignment's losing 148 million. Clover's losing 213 million. Again, that's going to be changing soon. Now, free cash flow, Alignment's at -95 million. Clover's at 116. Working capital obviously goes into effect for Alignment. So based off of this, I would say Alignment has more going for them, especially given that they have 186 million shares versus Clover has 482. Okay, so what I'm going to do now is I'm going to take the revenue for Alignment Healthcare, 1.824 billion, and then we're going to go ahead and do an intrinsic value calculation, and we're going to see, is the market accurately basically pricing ALHC? Okay, so we're going to do, let me just make sure I got the number, 1824. Hold on. We're going to take 5%, 91.2. We're going to go 10%. Now, the growth rate, I think, is going to be because they are growing really well, and I think they're growing around 25 to 30%. So I think we can do 2023 to 2019. But honestly, yeah, let's go ahead and do that. So let's just take the most recent growth years because let's do 2019 first. Let's just kind of do the top part first. So that's what 757, and then 2023 they have what 1824824. Yeah, so I think they're growing more than 25%, but we're gonna just keep it for 25%, then we're gonna go to what they're actually growing. So 186 is the share count. So as you can see, ALH is should be trading at $32. So obviously, based off, so let me just find the stock price now. $4.90. Um, hmm, it's a 5x from now, right? And you can see this is just basically giving bare bones 25%. And if you were to go to Yahoo Finance, and if you were to go here and type in ALHC and go to the analysis section here, you can see the overall growth, revenue growth, yeah, is around 31% for 2024 and then 20%. So we just took the halfway points given the calculation of 25. But let's assume, they double down on growth. Let's say they do 35%, right? We're looking at a $66 stock, but let's be conservative, do 25%. So overall, based off of this, Alignment Healthcare, $33. And it's currently, let's say, like 5. So 33 divided by 5, that's about 6.6. So 6.6 times, yeah. So that's about $6 billion. So this is about a $6 billion company, right? And evaluated as it's currently it's at a 1 billion, right? So if Clover was 6 billion, the stock price would be 12. So ultimately you can see how, you have to understand, like, these analysts are not stupid, right? So where these analysts that did these intrinsic value calculations, especially hitting up 9, they're giving it 9 because that's probably the 1 year, 2 year target they have. But overall, long run, they know there's value in this company. And if like Alignment Healthcare ends up basically executing on what they're doing, then I have no doubt in my mind that they are going to end up becoming a $6 billion company and having a $33 stock price. So this is a 5x for sure. I would say, you want to be conservative, you can call it a 2 to 3x, which is nothing to cry home about. That's a pretty good return. The thing is, like, obviously what differentiates this is the share count, 186 million shares versus Clover is 486. So you could see the share count here is you can see like why Alignment is such a good deal because it's just they haven't diluted shareholders, and they're not going to, from what it looks like, versus Clover. It's like are they going to do it in 2025? Are they going to dilute? Are they not? So you can ultimately see the difference between Alignment and Clover is, if we go here and look at this last picture, is that if you look at the ACO reach, they didn't double down on ACO reach, and that's the differentiating factor between Clover and LAHC. You see, they really double down on their Medicare Advantage, which is what helped them not have to dilute. The sad part is with Andrew is he diluted the mother effer out of Clover, especially just to fund the ACO project, and ultimately ended up leaving, which burned a lot of cash. That really pissed off a lot of investors. And he was trying to take a chance to differentiate himself, but he fucked up in that one. He really fucked up. And I hope the data that they got really helps them grow. And obviously it's transferable because, they have the best MCRs. So ultimately, if that can give them an edge, especially given that they can get the 4 stars and they can grow at a faster member rate, I guess the edge of the lower part of the MCR will offset the fact that they diluted. Fingers crossed. But overall, this is why, Alignment Healthcare is doing quite well and has more analysts covering them. But now, given that Clover's fixing itself and potentially going to increase their gross margins to maybe like 15, 16, 17. I mean, they're already going to get like MCR of around 80-ish%. I do think it will eventually be the superior company. It's just, they need to figure it out. The book value for ALH is 83 cents versus book value for Clover is 59 cents. LAH is not, Alignment Healthcare is not trading at book value, given that it's on track. Clover now, it's finally stabilizing, and Andrew Toy finally realize what it takes to be on Wall Street. So that's why he keeps on reiterating, oh, we've matured, et cetera, et cetera, et cetera. Okay, so there's this. Now let's go ahead and let's move on here. So maybe he got okay, we already saw that. I don't think Mr. Toy was a leader at the time. Yeah, no, they weren't. No, they absolutely weren't. But yeah, guys, holy crap, that was a long video, man. 15 minutes, jam-packed. I mean, come on, guys, you have to admit, have you found a YouTuber that does all this analysis? I mean, I'm not trying to like toot my own horn, but god damn, this was this a good video, right? What do you think? If not, give it a thumbs down. If you like it, give it a thumbs up. You be the judge. But overall, guys, last but not least, Clover's doing decent today. I mean, 8.68, nothing to cry home about, but it is pretty low. So we're waiting on that. I'm still accepting goats if you want to send them to me. I like goats. I'm just kidding. Don't send no goats. My dog is going to be like, what the hell? My cat's going to be like, I quit. I'm out of this family. First they bring dogs, now they bring a goat. All right, ladies and gentlemen. I will see you on the next one.